I think the results of Coromandel led me to think of getting in Rohan Gupta of Edelweiss to talk about, one, what happened there, and two, what could happen potentially to the space at large. Was this on anticipated lines? It probably wasn't, because the stock took a fair amount of beating yesterday. But what could happen going ahead as well? He's the Associate Director of Institutional Equities at Edelweiss, and he joins us right now on the show. Rohan, good having you. Thanks so much for joining in. We'll talk about the space at large, but just a brief mention about Coromandel as well. Yesterday, the reaction to the numbers wasn't pleasant, and probably rightly so. The street expects this one to do really well. Previous interactions with the management seem to have suggested that almost everything that needed to go right for this space and for the company was going right. What led to this performance?
Yeah, Neeraj, as you rightly said, that the results of the company was not that great yesterday, and was below than what the street was expecting, and that stock has reacted towards that. There were a couple of reasons that their fertilizer business during the quarter has witnessed the increased cost pressure, especially from phosphoric acid and ammonia prices, which was very volatile and has been continuously going up in quarter 3. Generally, these companies carry some inventory from the previous quarter. So there was the extended cost pressure in Q4, though the company have taken some price increase to pass on that cost increases, but that has happened at the end of February, and also this is a non-season for the company and for the industry, so the acceptability of any sort of price increase in non-season quarter is very less. So even if you increase the prices, you have to offset it by providing higher discount to the dealers, and then slowly you remove the discounts. So that's what generally, Q4 is the tendency. So I think the company's EBITDA margin in a fertilizer business has been affected because of rise in input cost. However, if I look at that, recently government has increased the subsidy on NPK fertilizer. On DAP, it is roughly worked out by almost 1,500 rupees per ton. Also, companies have taken almost 2,000 rupees price increases during the quarter. So going forward, Q1, I believe that the extended cost pressure which company has felt in a Q4 and that has affected the company's results in the current quarter shouldn't be the case, and their margins will go back to the normalcy going forward. That is one. In agrochemical business, we have seen some weakness. The margins have also tumbled down in the agrochemical business as well. We have to hear more from the management that why the agrochemical business margins was lower, but I believe that may be because of some rise in input cost and some global high inventory of probably mancozeb, which would have led to this kind of margin drop. On that, probably management have yet to give a more indication that why the agrochemical margins was down. But as you asked, that going forward, we believe that fertilizer business margins will be in the trajectory what management has always been looking for. So they will go back to the same trajectory.
Rohan, just a question. A couple of marquee investors parked in this stock. Other fertilizer stocks have really gone through the roof. Chambala case in point, and I'm sure each of these have their individual reasons. But with DBT doing what it is doing to the space by and large, and cash flow management thereof, and the general buoyancy, I've heard Thermax say that they're getting orders from the fertilizer sector, which hasn't happened in the last 10 or 12 years, which probably leads one to believe that the management of fertilizer companies are fairly bullish about some upticks that could come into the business as well. How bullish are you on this space? And within this pocket, fertilizer stroke agrochemicals, how bullish are you? What is it you're betting on?
Okay, FY18, the year we just ended now. So in that year, we were more bullish on fertilizer companies versus agrochemicals. The reason being that we were seeing the fertilizer companies was going to show improvement in profitability after almost 3 to 4 years of weakness. From last 3 to 4 years, fertilizer industry has been in a high glut of inventory, and the margins have been affected because of that. So FY18, we have seen improvement in fertilizer business. That's why you see that Coromandel FY18 profit has almost jumped by almost 45 to 50% compared to on last year basis, and that has been mainly driven by improvement in fertilizer margin. While on the other hand, agrochemical companies have witnessed slight poor results in FY18 because of monsoon and poor distribution of monsoon, and also global agrochemical prices and input prices of agrochemical companies or chemical prices was not rising, actually they were falling, so that we have seen that there is a roughly -3 to -4% price deflation was there in FY18 in agrochemical companies, and volume growth was also for the entire industry was muted at 7-8%. So agrochemical industry in FY18 actually didn't fare well. They didn't do well, but fertilizer companies did very well. That is primarily coming from the fertilizer margin expansion. Going forward in FY19, though we continue to remain bullish on entire agri space, also being the last year of the government, they have already announced many freebies in a budget, and a lot of focus is there on increasing the MSPs for the farmers. So I believe that net FY19, if also the monsoon protection so far has been quite positive. So FY19 is likely to be good for agri per se, but this year I believe that will be year of agrochemical companies, because for fertilizer companies I believe that margins at best should be holding on that what they have reported margins of last year. There may not be further increase in margin, and rightly so also, because their margins are now at a high end already. While for agrochemical companies, I believe that it is this year going to be better year than the last year. We should be able to see at least 3 to 4% price-led growth, which was missing last year and actually was negative. We should be able to see 10 to 12% industry growth driven by volume. So we are talking about agrochemical industry for FY19 can end up somewhere at 15% revenue growth, and that is happening after almost 2 years, 3 years. So we are going to see agrochemical companies probably looking in a better trajectory than fertilizer in this year, especially in FY19. Company like Dhanuka, PI Industry, Rallis India, UPL, Insecticide India, all these companies we believe that are likely to better perform.
Great, thanks for that lovely insight, Rohan. I'm afraid we are out of time completely on the show. Would have loved to chat more, but I guess we put the points into perspective. Thanks much for taking the time out and being with us today.